So tonight we are talking about foreign exchange, the trajectory, because I feel like we were all anxious about the JMD passing 160 to 1, but then it happened and no big deal, no big hullabaloo, nothing. It passed 161 and that kind of just flew under the radar, and here we are. What's the trajectory looking like now, Andre?
So let me just take a step back to say that for the year so far, there has been improved demand. We've seen where, yes, you're right, that currency has actually moved from 156.42 rounded at the start of the year to now be at 161.29 as at the end of trading today. Overall, a lot of the demand that we're seeing is actually from entity or institutions that are primarily in the business of importation of goods and services, and the BOJ has actually continued to intervene to supply that demand. They've sold 730 million US dollars to the market so far, which is just about 6.95% of the overall trading volumes in the market so far. Now, the truth is that one would have argued, and we have had those conversations in the past where analysts are saying that the BOJ is too active in the market. I think a report actually, or a recommendation actually came from the IMF at 1.2 to say they
Right.
should allow. Sorry.
Yes, I was agreeing with you. There was that IMF recommendation a few weeks
Right.
ago.
Right, to say that they should allow the currency to devalue a little bit more. Now, the issue with that is that once you have, that increased pace of devaluation or depreciation in the currency, what it will translate to be is, a higher rate of inflation possibly, because now you have that pass-through effect between the currency itself and inflation, because a lot of what we do here is reliable on or relying on the importation cost. So the BOJ at this point, I don't foresee that they're going to be opting to stay out of the market significantly, especially given that I think the last inflation number came out somewhere in the 3% region, and they would want to see those numbers trending down. And I think that is below what the target range is. I remember the target range between 4 to 6%, right? So once you have that number relatively low, I believe that they'll continue to maintain a presence in the market. We're also heading into the latter
Iran and
part of
Venezuela
2025
strengthen
where
alliances both condemn U.S.
overall
pressure.
depreciation in the currency is usually a little bit muted. Why? Because we tend to get remittance inflows, not a lot of activities that are dependent largely on buying currency. We're not seeing where just for example, the recent election results would have caused any form of um, uncomfortableness in the market to say that there is speculative demand or anything like that. So overall, at least for the rest of the year, we're expecting that while it still points towards the upside, the movement that we'll get is expected to be relatively orderly. And at some point, we also expect that the BOJ will continue to intervene in the market as well. Now, the context some people may argue is that while with the BOJ's involvement, the NIR is actually expected to be affected. Now, we have not seen that significantly playing out because I think the NIR now is the second month of over 6 billion. I think that's what 30 something weeks of imports. So, and I believe that they will always continue to look to protect the NIR. I know one of the things that they actually have as well to help support the currencies flowing into coffers is actually asking authorized dealers, meaning banks, building societies, and cambios, to actually sell a percentage of their purchases to the BOJ on a weekly or even daily basis. So overall, I think the market is expected to be somewhat stable, even though we may actually get moved toward the upside, but it will not necessarily be reflective of the peers that we might have seen towards well earlier in 2025.
Hmm. And so we're going to talk a little bit more about the BOJ as well. But I remember one of the last times you were on, Andre, we kind of laughed at the thought of the JMD
165?
getting to 200. We laughed at the thought of JMD getting to 200 to 1, and now we're at 160 odd. Is that so? Is 200 something that seems more likely now than it did at the start of the year?
Not right now. No, not this year. Not in the fiscal year. Not likely to happen. I believe the BOJ would throw everything in their arsenal at it to ensure that we don't get to those levels. In fact, you have to think about it from the perspective of what it means for goods on the shelves. Now, remember that a lot of what we buy, well, enough of what we buy is actually from imports. Even the input costs are from from things that we import. So if we do get that $200, that's a big percentage of our purchasing power that would have actually gone through the window. Not I'm gonna say that we're not likely to experience that in the next couple of months, not in this fiscal year at all at all.
All right, that's some consolation, but not much to be honest.
Well, you see,
Where, based on the current trajectory, like where would you predict we're going to end the year?
prediction. Um, it's difficult to say because there are a number of different variables that could actually affect it. And I was actually about to interject to say that the movement in the currency is not entirely dependent on just domestic factors because there are also external factors that could actually cause it. It would have had to be experiencing prolonged periods of uncertainties, financial turmoil on the external markets as well. It would also would be a case of the government themselves actually reducing or laxing the fiscal discipline that they would have already have. And it's hard to see both of those situations playing out significantly to the point that we will get that major run on the currency. There are geopolitical issues that we also have to consider, and whether or not we end up in a situation where the world is on the fire. There are pockets of issues. It's recently we see where Venezuela is being on edge, but to say that that escalates with the situation in Russia, Israel, that kind of thing, I don't necessarily see us ending up in a very dire situation unless there is a much more broad scale situation of geopolitical issues. To end the year, it's difficult. It's very difficult to say. I think maybe we should be somewhere in the 160s ballpark. I don't foresee that we should get beyond 165. That's a very aggressive approach. But given the arsenal that we've seen, where the BOJ is actually throwing behind the currency, I don't foresee that we will be. Again, there are external factors to consider. And usually, I don't like throwing around numbers because some of these things we don't see them until they just pop up. But at this point, 165, even to stay in the 160s region is a bit of a modest expectation from my perspective.
Should BOJ continue to be as aggressive as as they have been in defending the currency?
I believe that they should. The reason is that, again, as I mentioned, the cost of goods that we actually have on the shelf will be affected. And so, from that perspective, they should actually maintain the presence. There's also the issue of their desire to reduce interest rates. Now, you can't be looking to reduce interest rates when inflation itself
Boris
is
Johnson
heading
faces
towards
scrutiny over
the
undisclosed
upside. So
Venezuela links
if
and
they
hedge
want
fund
to
ties.
continue on that path, then it's a tool that they will have to continue to use to defend the currency.
Yeah, that inflation. Oh, all is going on, and it all affects our pockets. Like I'm thinking about what the back to school expenses were this year compared to last year, and prices, everything just gone up. Like it's been insane.
Yeah, and I don't want to sound like I'm trivializing the fact that things have actually gotten a little bit more expensive, but I was reading an article. I don't like to point out specific areas, but I was reading an article on the weekend where an analyst was actually saying that back to school shopping back to school overall has been significantly affected because in that particular economy they are experiencing issues with foreign exchange challenges, and uh, it's quite muted, again, because of the issue that they have around foreign currency and the availability of it. Jamaica does not necessarily have that situation as yet. Not exactly likely that we would do that. A number of things would have had to happen. But yeah, overall cost has gone up, and I think a lot of it has actually had to do with the a number of external factors, not just the movement in the currency itself.
Garvin is pointing out that the JMD depreciates around 3% every year. Now, it's an interesting point because I remember a few years ago when the BOJ was implementing BFIXIT, foreign exchange intervention trading tool, I think it stands for. The
Right.
whole argument was that, okay, now we're going to start seeing Jamaica's currency going both up and down. Because for years, it only moved one direction. Only one direction is up. And now that they have this new tool, we're going to start seeing it going up and down. It's going to fluctuate. Some days it will be up, some days it will be down. But in general, we're still seeing it inch up and up and up.
Well, so the trend is still up, but there are days when you actually end up with revaluation. There are periods when you end up with little to no movement in the currency. There are revaluation days, man. There
Yes,
are
it does
sometimes,
happen. It does
right.
happen. But when you examine the long term over the period of a year, 2 years, 5 years, it's
Mhm.
still going one way in general.
It would, because again, we depend a lot on imports. So once you have to be importing to that magnitude, it's not going to be a case of experiencing a currency that would be revaluing. Not like that.
Noel says Jamaica needs to build its net international reserves. Well, we're at 6 billion. Do
We're
we
over six
need more
billion, I
than
think,
that?
now. Sorry.
Do we need more than that?
It's always good to actually have extras in the coffers. I wouldn't say that we don't need it. It would be ill advised of me. I think July and August actually were over 6 billion, and for the last I think 18 months now we would have been over 5 billion. That's a respectable number. I would say that over time, as things evolve, that number would actually will that number increasing would actually mean positive for the country overall, because it is sort of your last ditch back pocket item that you can use to defend your economy in times of turmoil, especially when externally things are happening that are out of your control.
Chairman says best to earn USD rather than be buying it, though. Well, that I agree. I imagine you do too.
Yes, given it depends, because the thing is, and I'm not going to disagree with the point, but there are some institutions that will they do earn foreign exchange and they have bills in Jamaican dollars, so they're always converting, and the amount that they have to convert on a monthly basis actually gets cheaper if the Jamaican dollar payable as in bills actually remains the same over time. So it does add some protection to your portfolio if it's a case where you earn foreign exchange and your expenses are actually in Jamaican dollars.
Chun says stop importing rubbish from abroad. Would
Rubbish.
that, would that
Uh,
solve the problem?
I'm not sure exactly what the rubbish is that we
All,
do.
all the consumption, and especially now since they increased the duty free exemption from $50 to $100, people are just buying stuff on Amazon and Shein and all these places.
We're talking about the impulsive buying.
I suppose so. But do you think that
Um,
that has had an impact on where the JMD is now? The increase in the de minimis threshold from 50 to 100, so it creates more demand for USD because people now are able to buy more and bring it into the country duty free.
Mhm. Well, I don't have the exact number in terms of what that looks like, but I suspect it would have an effect. The magnitude to which it does is something that I cannot exactly speak to right now. But yes, you're right that some people would actually buy more because they're actually able to buy without paying that duty. But the truth is that if you really think about it from this perspective, right? If you have an income of, let's say, $10,000, right? Just for argument's sake, and you were thinking of buying a shoe, and that shoe in a store costs $5,000, right? The truth is that if you buy it online, some people actually believe that, and again, I won't speak to that side of it, that if you buy it online yourself, you actually get it cheaper. You might actually end up with a little savings, and therefore you might actually be able to have some in your pocket. But from a need perspective, it's something that even if you didn't buy it online yourself, chances are you would have walked into a store to buy it, and that store themselves would have actually bought it from overseas to actually sell to you here. So it's not a case of all of the changes is filtering into the foreign exchange. Some of it in terms of the additional buying that probably would be an effect that we're talking about here.
I'm going to take this last comment from Javon, who says, isn't it time to back our currency against a stronger currency or metals to lower its volatility? What do you think about that?
Uh, it's a tough one. I think I'm not I don't necessarily see that happening right now. It would require some change in framework that again it's difficult to see how it plays out. And then if you're talking about commodities overall, it's commodities generally have a lot more volatility embedded in them. If you look at oil, gold, that kind of thing, then it's a story that is a much more wild game than if you're talking about just the currency itself. So it would be a difficult sell to act for us to be getting into that space, but um, you know, uh, never say never. I doubt it will happen, but stranger things have happened, right?
True, true, true. Well, on that note, I'm going to leave it there. Thank you so much for joining us this evening, Andre.
Thank
Great
you.
discussion on the currency.